Nobody loves talking about taxes, but as entrepreneurs, freelancers, and savvy investors, we got to do what we got to do to keep more of our hard-earned cash, right? Especially with the year winding down, it's prime time to make some strategic moves. We're talking about potentially saving thousands of dollars, and who couldn't use a little extra padding in their bank account? Whether you're just starting out or you're a seasoned business owner, this video is packed with actionable tax tips that can make a real difference. So grab your coffee, get comfy, and let's dive into some year-end tax strategies that can help you conquer tax season like a pro. Remember, we're not just talking about surviving tax season, we're talking about thriving. All right, before we get into the nitty-gritty of deductions and credits, let's talk organization. It's the unsung hero of financial success. I know, it's not the most exciting part, but trust me, getting your financial house in order is the foundation for everything else. Without a solid organizational system, even the best financial strategies can fall apart. Think of it like this. You wouldn't try to build a house without a solid foundation, right? The same principle applies to managing your finances. A well-organized system is the bedrock upon which you can build a stable financial future. Same goes for your taxes. A disorganized mess of receipts and statements is a recipe for missed deductions and potential headaches down the line. Imagine trying to find a needle in a haystack. That's what it's like trying to locate a specific receipt in a pile of unorganized papers. So how do we tackle this? The first step is to commit to the process. It might seem daunting at first, but breaking it down into manageable steps can make it much more approachable. First, gather all your important documents. Think income statements, expense reports, receipts for business expenses. This might take some time, especially if you've been less than diligent about keeping things in order throughout the year, but it's a crucial step. Next, create a system that works for you. This system should be something that you can easily maintain. It doesn't have to be complicated. In fact, simpler is often better. Maybe it's color-coded folders, a spreadsheet, or a dedicated accounting software. Whatever helps you keep track of everything. The key is consistency. Once you have a system in place, stick to it. Remember, a little organization now can save you a ton of time and stress later on. Not only will it make tax season less of a headache, but it will also give you a clearer picture of your financial health throughout the year. This clarity can help you make more informed decisions and ultimately lead to better financial outcomes. Don't forget about your digital documents. In today's world, a lot of our important information is stored electronically. Make sure you have a system for organizing your digital files as well. This might include scanning paper documents and saving them in clearly labeled folders on your computer or using cloud storage for easy access and backup. Consider setting up a regular schedule for organizing your documents. This could be a monthly or quarterly task where you review and file away any new documents. Regular maintenance can prevent things from getting out of hand and make the process much more manageable. There are also many tools and apps available that can help you stay organized. Expense tracking apps, for example, can help you keep track of your spending in real time and categorize expenses automatically. Find the tools that work best for you and integrate them into your system. Finally, don't be afraid to seek help if you need it. Whether it's hiring a professional organizer, working with an accountant, or using a financial advisor, getting expert assistance can make a big difference. They can provide valuable insights and help you set up a system that works for your specific needs. In conclusion, taming the paper and digital beast is all about creating a system that works for you and sticking to it. With a little effort and consistency, you can transform chaos into order and set yourself up for financial success. So take a deep breath, roll up your sleeves, and get started. Your future self will thank you. Now let's shift gears and talk about investments. As entrepreneurs and high-income earners, we're always looking for ways to grow our wealth. But did you know that certain investment accounts can also help you save on taxes? One of the most powerful tools in your arsenal is the tax-advantaged account. These accounts, like 401(k)s and Roth IRAs, offer incredible tax benefits that can supercharge your savings. With a traditional 401(k), you contribute pre-tax dollars, which reduces your taxable income today. Your money grows tax-deferred, and you only pay taxes when you withdraw funds in retirement. Roth IRAs, on the other hand, use after-tax contributions, but your withdrawals in retirement are completely tax-free. Choosing the right account depends on your individual circumstances and long-term financial goals. All right, let's talk about timing your income and expenses. This is a crucial aspect of financial management that can significantly impact your bottom line. Whether you're a seasoned business owner, a freelancer, or just someone looking to optimize your personal finances, understanding how to strategically time your income and expenses can make a world of difference. This is a powerful strategy, especially if you're a business owner or freelancer with some flexibility in when you get paid and pay bills. The ability to control the timing of your income and expenses gives you a unique advantage in managing your cash flow and tax liabilities. Think of it like a dance. You want to defer income to the next tax year and accelerate expenses into the current year whenever possible. Why? Because this can help you manage your taxable income more effectively. By deferring income, you delay the tax liability associated with that income, giving you more time to plan and prepare. Because pushing income to the next year means you're not taxed on it yet. This can be particularly beneficial if you expect to be in a lower tax bracket next year. For instance, if you anticipate a career change, a reduction in business revenue, or any other situation that might lower your taxable income, deferring income can result in significant tax savings. This is especially helpful if you anticipate being in a lower tax bracket next year, maybe due to a planned career change or a drop in income. By deferring income, you can take advantage of the lower tax rates, thereby reducing your overall tax burden. It's a strategic move that requires foresight and careful planning. On the flip side, accelerating expenses into the current year allows you to claim those deductions sooner, potentially lowering your taxable income for the year. This can be particularly useful if you had a profitable year and are looking for ways to reduce your tax liability. Accelerating expenses means you can take advantage of deductions now rather than later. For example, if you know you'll need new equipment for your business next year, consider purchasing it before December 31st to claim the deduction on your current year's taxes. This can help you manage your cash flow more effectively and reduce your taxable income for the current year. Now, this isn't about being shady or trying to cheat the system. It's about being strategic and maximizing the tax code to your advantage. The tax code is designed to encourage certain behaviors, such as investing in your business or saving for retirement. By understanding and utilizing these provisions, you can make the most of the opportunities available to you. It's about being strategic and maximizing the tax code to your advantage. For example, if you're expecting a big invoice to be paid in December, see if your client is open to pushing it to January. This simple move can defer the income to the next tax year, giving you more time to plan and potentially reducing your tax liability. For example, if you're expecting a big invoice to be paid in December, see if your client is open to pushing it to January. This can be a win-win situation for both parties, as it allows you to manage your cash flow more effectively and potentially reduce your tax liability. Or if you know you'll need new equipment for your business next year, consider purchasing it before December 31st to claim the deduction on your current year's taxes. This can help you manage your cash flow more effectively and reduce your taxable income for the current year. Remember, every dollar you legally save in taxes is another dollar you can reinvest in your business, put towards your goals, or invest to build long-term wealth. Every dollar you legally save in taxes is another dollar you can reinvest in your business, put towards your goals, or invest to build long-term wealth. It's all about being smart and playing the long game. By understanding and utilizing the tax code to your advantage, you can make the most of the opportunities available to you and achieve your financial goals more effectively. It's all about being smart and playing the long game. By understanding and utilizing the tax code to your advantage, you can make the most of the opportunities available to you and achieve your financial goals more effectively. So take the time to plan and strategize, and you'll be well on your way to financial success. All right, let's talk tax credits. These are like golden tickets when it comes to saving money on your taxes. Why? Because they directly reduce your tax liability, dollar for dollar. That's way more powerful than a deduction, which only reduces the amount of income that's taxed. Think of it this way. If you owe $5,000 in taxes and you have a $1,000 tax credit, you now only owe $4,000. It's a straight-up reduction. Now, there are a ton of tax credits out there, and they change pretty often, so it's important to stay updated. Some credits target specific industries or investments, while others are more general, like credits for education expenses or energy-efficient home improvements. The key is to do your research and see which ones you might qualify for. Okay, let's talk about something that many business owners overlook: the power of a good tax professional. You see, running a business is already a monumental task. You're juggling multiple roles, from managing operations to handling customer relations and everything in between. The last thing you want to do is add the complexity of tax management to your already overflowing plate. I know, it's another expense. And you might be thinking, I can handle my taxes myself. After all, there are plenty of software options out there that promise to make the process easy and straightforward. But here's the thing. Tax software can only take you so far. It doesn't replace the nuanced understanding and strategic thinking that a seasoned tax professional brings to the table. Look, I admire your DIY spirit, but trust me on this one. The tax code is incredibly complex and ever-changing. What worked last year might not work this year, and the penalties for mistakes can be severe. A tax professional stays up to date with all the latest changes and knows how to navigate the intricacies of the tax system. Tax laws are like a constantly shifting maze, and unless you're spending all your time keeping up with the latest changes, you're bound to miss something. Imagine trying to solve a puzzle where the pieces keep changing shape. That's what it's like to handle taxes without expert help. And let's be honest, as a business owner, your time is better spent growing your business, not deciphering tax codes. A qualified tax advisor, whether it's a CPA, an enrolled agent, or a tax attorney, can make all the difference. These professionals have dedicated their careers to understanding the tax landscape. They bring a level of expertise and insight that you simply can't get from a software program or a quick online search. They eat, sleep, and breathe taxes. This isn't just a job for them, it's a passion. They thrive on the challenge of finding the best possible outcomes for their clients. They know the ins and outs of the tax code like the back of their hand, and they can apply this knowledge to your unique situation. They know the ins and outs of the tax code like the back of their hand. This deep understanding allows them to identify opportunities and strategies that you might never have considered. They can help you plan for the future, ensuring that you're not just compliant with current laws, but also positioned to take advantage of any new developments. And most importantly, they can help you uncover hidden deductions, credits, and strategies that you might not even know existed. These hidden gems can significantly reduce your tax liability and increase your bottom line. So, while hiring a tax professional might seem like an added expense, it's actually an investment in your business's financial health and future success. Don't underestimate the value of expertise. It can be the difference between just getting by and truly thriving. So there you have it, smart, actionable year-end tax strategies to help you save thousands. Don't let the tax season stress you out. Take control, implement these tips, and set yourself up for financial success in the year ahead. If you found this video helpful, don't forget to hit that like button, subscribe for more money-saving tips, and share it with your fellow entrepreneurs. Until next time, here's to keeping more of what you earn